Gautam Bhasin, welcome to the Find Your Ultra podcast. Finance is a subject that bothers a lot of people. Unfortunately, it is one of the things like health. Whether you care about it or not, is going to affect you.
Almost everybody thinks that to manage a portfolio or to build a portfolio, you need analytical skills. But the fact of the matter is that to build a personal portfolio, you need more behavioral skills than analytical skills.
What is bad investment advice according to you?
Anything which is not plan-based is generally bad, because we are living in information era and there is so much information attacking us that at any given point in time we want to act.
There's so much stimulus that is tempting us to.
Yes, so we want to act, and action is overrated. Inaction is underrated. Now, being an influencer, if you tell people not to act, then it becomes very boring. And if it becomes boring, then it can't get viral. So they actually promote things which are action oriented, and whereas to create wealth sustainably over a long period of time, you don't have to do much, and which is actually a behavioral trait and not an analytical trait. There are principles and there are practices when it comes to personal investing. Now, the most important principle is look at cities like Gurgaon. Now, especially the senior professionals, the kids are going abroad. There are examples that, there are 120 kids in one school and 118 went out. And education outside is pretty expensive. Yeah. So one, it's a bigger goal. And second is, after spending that money, will you be left with enough money to survive 30, 35, 40 years of your life? Then retirement becomes the biggest time bomb. A lot of these youngsters are trapped because of lifestyle changes. People want expensive phones, but a lot of these youngsters spend 3, 4, 5, 6 months salary on a phone.
Yeah.
Which is kind of unsustainable.
What are your views on crypto? Welcome to the Find Your Ultra podcast. This is an episode about finance, personal finance to be specific. Over the last few years, we've all learned a lot about finance, like a lot more about finance than we ever knew before, or so we think. But how much of that advice is actually applicable to us? How much is actually right for us and how much isn't? Do we really understand the core principles of investing? Now, these are some of the things that we've tried to learn in this episode. How can the working class actually generate wealth? This conversation is with Gautam Bhasin, who is the founder of Prospurts, an organization dedicated to helping the working class generate wealth and those who have money manage wealth. In this episode, we didn't deep dive into anything. We really just focused on understanding the core principles of investing and wealth creation. And at the end of it, we realized we definitely need a series of episodes to really educate ourselves on personal finance, which is what we intend to do in the subsequent episodes. So without further ado, here's Gautam Bhasin and me in the Find Your Ultra podcast. Indulge away. Gautam Bhasin, welcome to the Find Your Ultra podcast.
Thank you, Vipin. Thank you for having me on the show.
Thank you for agreeing to teach us about money, something that we just don't know much about. Finance is a subject that bothers a lot of people, and not everybody has a good relationship with money, and that can be troublesome. And unfortunately, it is one of the things like health. Whether you care about it or not, is going to affect you, no matter who you are. And so we do need to learn about it. So I'm glad we are doing this. We, on the Find Your Ultra podcast, we begin with getting to know the person first. So let us get to know your journey. Please take us back to your childhood and what brings you to the point that you're here.
Sure. So first of all, before starting my journey, I will say that, it is very important to differentiate between finance and personal finance. So everyone, when I look around, people use finance for personal finance. Personal finance is something related to an individual and his family.
Right.
Whereas finance is a very broad term, even corporates, their finance, it's covered under that.
Yeah.
So personal finance, you have to look at it from a different perspective. Now, coming back to my childhood, both my parents were teachers in central school. So I have spent majority of my childhood in cantonments, and I did my 12th in science, not because of anything else, but the main reason was that there was no commerce section in my school.
Okay.
So there is a misconception that, you need to be a commerce student to be a better personal finance manager or a portfolio manager and all. So I did my 12th from science, and then for some reason, I thought that, I moved to commerce in graduation. Did not have too much idea about what to do along with the BCom honors. Someone suggested me to enroll for CA. So I did CA. I started my CA and then I eventually completed it. But while I was about to complete my CA, I kind of realized that I am not cut out for accounting and taxation, and this is not something which I can do for very long period of time. And that was precisely the same phase when CNBC had come to India.
Okay.
I started watching it. I kind of felt that, stock prices are going up and down, and, it was quite fascinating for me. And the way that myth is there that, if you're good in maths, you will be probably a better chartered accountant. Similarly, there was a myth that if you're a chartered accountant, you will be a better personal finance manager or a better research guy. ऐसा होता नहीं है कुछ भी, though it helps you in some way, but it's not directly linked. So, but with this thing in my mind, I thought that why not get into investments segment? And then I kind of explored, multiple broking firms in Delhi, and then realized that, and I'm talking about 2000. So then I realized that it is better to go to Bombay in case I want to build my career there in this segment. So then I started my career with an institutional broking setup as an analyst. So I used to track auto and banking sector. But then while doing CA, I was exposed to entrepreneurship for the first time because I'd spent all my childhood in cantonments wherein, there wasn't any commercial activity happening. So that entrepreneurial bug caught me, and then I started my broking setup way back in 2001 in Punjab because my parents were in Punjab and I had done most part of my schooling from Punjab. Did that for 4 or 5 years and then kind of realized that I need to move to a bigger city. I sold my business and I moved to Bombay. Fortunately, I got a job with HDFC Bank in private banking division, and I joined the research department. Very soon I got promoted as head of research, and so I got to know about personal finance more in HDFC Bank, because prior to that, whatever I was doing was mostly speculation in a broking setup. You think you are helping people invest, but you are actually, making them speculators. And I was too young, too naive to even understand that at that point in time. So I joined HDFC Bank in private banking division, wherein we used to manage money of ultra high net worth individuals. Did that, played that role of research for a couple of years. And then somewhere I realized that I need to be speaking to the real client, because when you are in research, you are thinking everything is there in your mind. You are not talking to the real client. You may feel something will work for the client, but the client is not acting on it. Even sometimes the advisors are not acting on your advice. So I thought that let me get the taste of client management. And then my bank was when I requested them, they moved me to Delhi as head of private banking for one part of North. That is where I met customers, real clients. That is where I realized that how fear and greed impacts their mindset, their behavior. And while I was doing, I was handling portfolios of these ultra HNI clients. I looked around and I saw that, my cousins, my brother-in-law, or my friends who were professionals, working professionals, nobody's serving them. And then I kind of thought that why is no one serving them? And even though they are doing well, some of them were, passed out from good colleges like IIT, IIMs and all. But when I looked at their personal portfolio, there wasn't anything except real estate. So they were making good money, and when they had money in their account and they were kind of clueless, or maybe they are investing in some random IPOs or NFOs or insurance products, in the same line, they started investing in real estate. So I realized that, fine, even though they have done well academically and they are doing well professionally, somewhere the financial literacy is not there. And they are not building their portfolios. And when I looked back at my ultra HNI clients, I realized that their problem is very different. They already have a lot of wealth. So their problem is of wealth management. Whereas this set of people, the working professionals, their problem is of wealth creation. Only when you'll create the wealth is when you will manage it.
Right.
But what our industry was doing was that we were applying, the same formula, same set of solution which we were giving to ultra HNIs to everybody. And it was somewhere not working out. And these guys are smart. So when it was not working out, they had no clue what to do. But they somewhere felt that, we don't want to do this. And hence they became kind of DIY investors. And whatever asset class was doing well, like in that era, I'm talking about 2009, 10, 11, 12, real estate was doing well. So everybody invested their money in real estate. So with this thought in my mind that there is a gap and there, someone needs to fill this gap by servicing this set of clients, I kind of started Prospurts. And of course, there were multiple reasons which we found out before starting, after starting. We realized that, typically someone who's a working professional, majority of them would have done their schooling and college from multiple cities. They would have worked in ABC, city, country, continent. And hence, unlike a businessman who's born and brought up in Delhi and who's living here since last 30, 40, 50, 60 years, or their family is living here, they don't have set advisors for anything. So whenever they need something, they look for advisors around.
Right.
And since personal finance is something, which they feel that they can manage on their own, so either they Google or they study stuff online or they follow what their friends are doing. So I kind of realized that, this is probably the most important reason that they don't have set advisors and no one is meaningfully managing them. And if there are bankers who are managing them, they are applying the same solution which they are, providing to ultra HNI customers who already have a lot of wealth to them. So it is somewhere not working out. So with this thought in mind, I started Prospurts. And if you look at the word Prospurts, it's a coined word. It is made up of 4 words: prosperity, spurt, experts, and professionals.
Okay.
So and it was very clear in our mind that we want to first look into this segment, look at their problems, learn about their problems, and then find solutions. Of course, when we started, we were not clear that whether these senior guys will come to us or not, whether they would want to go to bigger banks, bigger wealth management outfits. But now, after almost 10 years, we are managing close to 600 families, and now very confident that, we understand their problem more than anybody else, and we have solutions which are kind of really, solving those problems.
Brilliant. You're completing 10 years soon.
Yes. Yeah.
Awesome. You said people either DIY or they look for advisors, right? What percentage do you think actually goes to apps like ET Money and all those? What percentage of people invest through those?
So, youngsters go through those. And see, what has happened is in last 4-5 years, post-COVID especially, the market's been doing very well. So people right now do not feel the need to have an advisor. And there are so many influencers giving a lot of random yarn, making them these clients, investors, young investors confident that they can manage money on their own. Almost everybody thinks that, to manage a portfolio or to build a portfolio, you need analytical skills. And the educated class feels that they have those analytical skills or they can learn those analytical skills. But the fact of the matter is that to build a personal portfolio, you need more behavioral skills than analytical skills. I'm not saying that people do not have behavioral skills, but the fact is that they don't know that they need behavioral skills. So hence, right now, if you look around, you'll find more DIY investors as compared to, especially in the younger category, who go to an advisor. And of course, there is also this myth that, youngsters typically feel that maybe the advisor would be too expensive, or maybe we do not have that much money that an advisor will support us. So there are many such things. Hence, that DIY category is quite famous across youngsters. But if you talk about matured, investors in the age bracket of 35, 40, 45, 50, they are very busy in their profession. Second, they have understood by playing a lot of games that this is not their cup of tea and they need some professional advice. So they ultimately find an advisor to manage their wealth.
And there's a lot of advice floating around on the internet, like you mentioned. What is bad investment advice according to you?
Anything which is not plan-based is generally bad.
Okay.
So if you're giving random advice on Insta, it will not work for everyone. It may work for someone. But
the reason these things go viral and the reason people like them actually is because people are always seeking a solution like a formula like thing. Like मुझे इतना बता दो कि ये करना है, and then I'm sort of set, because I don't want to spend too much time, because people have, like I said, complicated relationship with money. Like I've worked with artists and creative people as well, and they are also like, let me focus on my craft, and sitting with the CA or an investment manager feels like a pain. कि यार ये करना पड़ेगा.
See, the fact of the matter is our industry is also maturing. We are too young. See, if you go to a developed country like US, people have been investing money since many decades. And over there, this investment advisory profession has evolved. India is still a very young country when it comes to investment advisory. So even the service providers, genuinely, most of them do not know what is the real solution. In India or in many other developing countries, we are actually selling products in the name of advisory. So to be fair to investors, see, they are also right at some place, because when they go and meet these guys, they don't get a solution which is actually helpful for them. Yeah, so see, there is a universal formula which is compound interest. If you have remember, it was taught in, I think, secondary school. A is equal to P multiplied by 1 plus R upon 100 to the power T. There are three variables: principal, which is amount invested; R, which is return generated; and T, which is time for which you have invested. Now, these influencers sometimes tell the right story, that you need to invest for a long period of time. You need to invest adequately is P. Long period of time is T. And actually, if you look at this formula mathematically, it works well. But lot of influencers focus on R. And mathematically, returns. And mathematically in this equation, R comes at the last. And higher, I'm not saying that you don't need higher returns, but higher returns in this formula will only work when you have high P and high T, which means that you have invested a lot of money and invested for a long period of time. And that is where, when I said behavioral initially, investing for a long period of time is very tough, because we are living in information era and there is so much information attacking us that at any given point in time, we want to act.
There's so much stimulus that is, tempting us to.
Yes. So we want to act, and action is overrated. Inaction is underrated. Now, being an influencer, if you tell people not to act, then it becomes very boring. And if it becomes boring, then it can't get viral. So they actually promote things which are action oriented. And whereas to create wealth sustainably over a long period of time, you don't have to do much. And which is actually a behavioral trait and not an analytical trait. So this doesn't work the way it seems that it is working. Yeah. But a lot of DIY investors follow this, and they learn the lessons over a period of time.
So you said to generate wealth or to create wealth, you don't have to do much. Yes. Then would you help us with broad principles of how to go about making an investment portfolio where one does not have to do much?
See, there are principles and there are practices when it comes to personal investing. Now, the most important principle is faith in future.
Okay.
Second is patience, and third is discipline. So unless you have faith in future, see, if you look at human mankind, we are probably living in the most peaceful era, most technologically advanced era. Yeah. Healthcare is at its level best. So we are improving on daily basis. But if you go back, generations will tell you that we are living in the worst period, or we also say that, now the time is bad. But actually, everything is improving.
Yeah, every generation says politicians are terrible, times are terrible. Yes. Yeah.
So one needs to first have faith in future. Once you have faith in future, then only you can be patient about something. Yeah. If you don't have faith in future, then you will not have patience. So if I have to give you an example, like a lot of people say that, gold and real estate will never go down.
Yeah.
So they have faith in future of real estate and gold. And hence, even when real estate and gold doesn't perform for 10 years, like real estate didn't perform from 2010 till 2020, or gold didn't perform in between for 7-8 years, people had the patience because they had that faith. And because they had that patience and faith, they were disciplined enough to keep investing in these assets. So these are the principles which apply to every asset class, more so to equity and financial products. But since these products are too new to Indian, 15 years back, retail investors were not investing in equity. And then, we kind of had two shocks in the form of dot-com burst and then global financial crisis in 2008. Yeah. Kind of pushed people away from investing in equity. But these are broadly three principles. And then there are three practices. One is asset allocation. Like if you have 100 rupees, how much money should go into gold? How much money should go into real estate, equity, and debt?
How does one decide that?
So, see, that is quite personalized and profile based. Okay. So for somebody who's 25 years old, one can go aggressive and invest more in equity. Someone who's middle age, maybe 40, 45, 50, you will start moving your money towards debt because the retirement age is close. And someone who's kind of retired or in old age probably would want to have a more conservative portfolio.
Right. So it depends on your risk appetite.
Depending upon your profile and risk appetite, you would decide that. Then this is followed by diversification. Now, people interchangeably use asset allocation and diversification, but diversification typically is within one asset class. So if you are investing in equity, how much is in domestic market or international market? How much is in large cap versus mid cap versus small cap is how you diversify the portfolio. And third is your rebalancing. So let's assume you start with a 80-20, 80 equity, 20 debt, hypothetically, and equity goes up. and your 80 becomes, quite big as compared to that debt, because debt moves slowly, then you take some amount of money away from equity and put it back in debt, so that it becomes 80-20 at the end of the day. But to summarize, principles are more important than practices. Within principles, faith in future takes the lion's share. Unless you have faith in future, nothing's going to work. Similarly, within practices, asset allocation takes the lion's share. But amongst all, faith in future is the most important thing.
Gautam, what is the main pain area that working class professionals feel when it comes to investing?
So, first of all, most of them don't know what is the pain area. Because what has happened is that, our parents lived a frugal life. And they are not facing a problem in their retirement life, because either we are supporting them or their lifestyle is such that they are able to manage. And typically our mind learns from history. And we also, our generation also has this kind of myth that, हमारी life भी ऐसे निकल जाएगी. But the biggest pain area of working professionals, if you ask me, is retirement phase. I think we are sitting on a time bomb called retirement. And this generation in India was made the kind of insane money people in Gurgaon, Bangalore, Bombay has made for the first time. And the lifestyles have gone up. And it's not just that they're making money, they're spending it as well, which means that their saving is less. So if they have to maintain that lifestyle for 30, 40 years between husband and wife, till the time the last person, one of them survives, and then while maintaining the same lifestyle, then you need tons and tons of money. And right now, since the cash flow is coming in at a brisk pace, one is pretty confident that they will manage. But if you look at it between 55 and 60, once the professional life kind of stops, then you are left with minimum 30, 35, 40, 45 years of retired life. And to maintain the same lifestyle, to probably repair your house couple of times, to keep buying cars every 5, 6, 7, 8 years.
Or pay for healthcare if needed.
For healthcare. So you need a lot of money. And people do not have a clue how much money do they need. So if you ask us in our planning, whatever we do, the main focus area is retirement. Second is, if you look at cities like Gurgaon, now, especially the senior professionals, the kids are going abroad. There are examples that, there are 120 kids in one school and 118 went out. And education outside is pretty expensive, especially with, our rupee depreciating. Especially against USD. So the education has become quite expensive. Now, see, working professional, if I look at myself, I have grown by taking the same path. Like my family was middle class. They focused on our academics, and their sole aim was that we should do well in academics and so that we can have a good professional career. Similarly, we are also thinking that, our main aim is to just provide education to our kids, and rest everything will be managed. So one, it's a bigger goal, kids' education, especially if they are going abroad. And second is, after spending that money, will you be left with enough money to survive 30, 35, 40 years of your life? In our generation, we are still supporting our parents. They are also supporting us. But when it comes to next generation, I think the whole world for them will be one city. You don't know which city they will be in, which country they will be in, and they will be fighting their own battles. So for us to assume that they will come and support us financially, emotionally, physically, I think it's not a real expectation. So if you keep everything in mind, then retirement becomes the biggest time bomb, followed by your kids' education, followed by house. But I would assume that everybody in India at least buys a house by the time they are in their profession. So retirement is what one needs to focus on.
And how do you help people then? So you start with a goal.
See, our aim is very simple. We are a little countercultural as compared to how the industry works. So industry focuses on goal. See, my thought process is that, I want you to have enough money so that there is a positive cash flow at any given point in time in your life. And then you should have sufficient wealth that while spending that money, you should not feel that tomorrow it will get over. See, on Excel, you can plot whatever you want to plot. But when your money pot is getting shrinked, then you'll stop spending that money. Because you will feel that, it is getting over and let me not spend. And that is why if you look around, a lot of senior citizens, they won't go to doctor, they'll go to chemist and ask his advice so that they don't have to pay money to the doctor. So my basic aim is not getting you high returns. It could be 8%, it could be 10%, it could be 18%. First aim is that you should create enough wealth that you have a positive cash flow throughout your life. And tomorrow, if we feel that you can't create that wealth for whatever reasons, that you don't have that kind of saving rate and your goals are way too high, then we would want to work with you to cut your goals down or to prioritize your goal. And we also teach clients that retirement is their primary goal. They have to be selfish, because we are trained in such a manner that first you do everything for your kids and then you think about yourself. But in this cycle, you won't be left with any time. You won't be earning anything. And what is happening is, coming back to the first point, we are giving the solutions which are being made for ultra HNI to this segment. See, ultra HNI businessman may have a factory or a business of his own. His cash flow will keep coming if the business is there. And there is a value of that business also.
Yeah.
But professional retires one fine day and the cash flow stops.
Yeah.
So you can't, and while serving ultra HNI, we do not talk about retirement much because they're running multi-generational businesses.
Yeah.
And that's why that, somewhere the bankers, the wealth managers, they are focusing more on return when dealing with ultra HNIs. And the same theory is being told to them, to these working professionals, that you need to focus on return.
Yeah.
But that doesn't solve the problem. Even if you create sufficient wealth with 6%, it is good. It is solving your purpose. Of course, if you make 10, 12, 13, 14, 18, 20, nothing like it. But first of all, we need to provide you with enough wealth so that everything is sorted.
Let's talk about my friend who, let's say, invests in mutual funds. He runs a few SIPs. And he's patient enough to keep his money there, SIP, right?
Yeah.
What's he doing wrong, or what could he do better?
So first of all, SIP is not a product, it's a mode to invest. You are investing regularly. Now, there's nothing wrong with it per se.
Is there a lost opportunity there?
So I'll tell you, have you seen individuals who walk in parks every day and they've been walking since 40 years?
Of course.
But if you see them walking, you will feel that they have problem with their knees. They are overweight and they're not healthy. But they've been walking since 40 years. Same is the case with SIP. If you're doing an SIP of adequate amount in right kind of funds, nothing like it. But in my experience, poor investment is not that big a problem. The biggest problem is underinvestment. You are doing SIPs, but you may be doing SIPs of an amount which is not going to solve your problem. But mentally, there is a tick in your mind that I am doing my SIPs. And the classic example is this Sukanya Smriddhi account.
I was going to ask you that question.
See, a lot of people urban people living in Gurgaon, working professionals, they need tons of money for their girl child.
Yeah.
Just by opening a Sukanya Smriddhi account and parking some money in it is not going to solve a problem. But they get that tick in back of their mind. When you talk to them, they say कि उसके लिए तो मैंने Sukanya Smriddhi कर लिया है. So there's nothing wrong with Sukanya Smriddhi or SIPs, but it is very important to know whether you are adequately investing or not. So if your question is that what can you do better, first of all, we can figure out how much SIP is required for that particular person, whether he has that kind of saving or not. If he doesn't have that kind of saving, if he can save, then he must save that much. If he cannot save that much, then he must rework on his goals, or he must rework on his income, which is not in his hands, but still.
The question I wanted to ask you about Sukanya Smriddhi was, a friend of mine was telling me about this and he said you must have it. But I had done a SIP of equal amount, like equal sort of similar sort of a thing. And I was telling him the calculation that I have, I'll be making more on this. But you are saying that conversation does not lead you anywhere because you're anyway not saving enough. Because ye bhi enough nahi hai aur wo bhi nahi hai.
But
you'll probably need more.
If you invest in equity for a long period of time, it will give you higher returns. It will create more wealth for you, especially in case of kids. From their perspective, one should be investing in equity.
Okay. And so, I mean, the younger generation these days is very smart and they're thinking about retirement pretty early. And unfortunately, my time, all I heard was save, and saving just sounded so passive to me. Okay, save kyun karna hai? Just because you might need it someday. Investment, on the other hand, sounds it has something that can, help you in future. मतलब बहुत फर्क है दोनों में. The tone, like the ring to it is very different from saving. तो इन्वेस्टमेंट पे फोकस नहीं था, सेविंग
Yes.
थी हमारी जनरेशन पूरी, तो वो मुझे कभी अपील नहीं किया. बट इन्वेस्टमेंट साउंड्स वेरी गुड. But people who are, let's say, 40, on the wrong side of 40, and they've not done much of investing, let's say maybe they've put in some money in real estate and stuff, have they missed the boat? Can they still do retirement planning and have enough?
See, that depends upon how much they are making and how much they have saved, how much they will inherit. So it is quite personalized, but 40 is a decent age. If somebody wants to be helped, one can help him or her.
Okay.
So they have missed the boat to an extent that they have not invested in, let's say,
Because compounding is the biggest thing.
But 40 is a decent age. If one ends up, earning till 60 years, 20 years is a fairly long period of time.
Okay.
And see, what happens is that when you start investing in a focused manner, then you also cut down on a lot of things which you were just unnecessarily you're spending money on.
It's a bit like health. When you start, when you become active, you start noticing what you're consuming as well.
Of course. So if you're not saving, then you may be spending tons of money on travel. But when you are saving and you know that you need to save, then you may cut down on one travel a year, in the sense that you were probably traveling thrice a year. Now you'll travel twice a year. You may go for a property which is probably not 5 or 4 star. Maybe you'll be okay staying in a 3 star.
Yeah.
And you will probably take more rational decisions when it comes to spending. Or discretionary spend, you will start prioritizing it, whether you want to change a TV every 3 years, you want a bigger TV every 3 years, you want to change your refrigerator every 3, 4, 5 years or not.
And I think these behavioral changes can happen only once you have something in front of you, like a goal to look forward to or something that you're working towards.
I would say plan, yeah.
Plan. Because otherwise, why? Like, if you're not working towards anything, then you will just go with the flow and make all these decisions.
So in high likelihood, one will remain underinvested, if not poorly invested. I have rarely come across a case wherein someone was adequately invested.
Acha. Bulk of the people, in your opinion, are underinvested.
Underinvested, they end up spending more money because, see, they don't realize that, they will need a lot of money a few years down the line. So let's assume you spend 2 crore rupees in your child's education if he's going to US as on day 2, 3, 4 is the range. And if my son, let's assume he's 8 years old and he will go after 10 years, then human mind can't calculate how much money will be required because your INR is depreciating, there is an inflation in US, there's an educational inflation. So whatever your money you are saving in India right now is sufficient to take care of that, whether it is growing at a decent rate that it will take care of that expense or not is not known to people.
Yeah, I see why does one need an expert to help? Because there are all these products available all the time, and you get all these calls every single day. Ye scheme hai, wo scheme hai, and I even wonder sometimes, do people buy like that? Like
a lot of people buy like that, and that is why these calls are made. Because they encash fear or greed. If the markets are going up, everybody is greedy and you can encash that behavior. If the markets are falling, there is fear everywhere and you can make a call and come up with a product which will take care of your fearful nature. So these things work. But typically anything which is not part of a plan, which is not plan linked, one should not be investing. Anything which is, I would say, directional and you don't have a fundamental view behind that directional thing, you should not invest. So to give an example, let's assume real estate is going up, so everybody will go after real estate. Now equity is doing well since last 3-4 years, so everybody wants to invest in equity. Small caps were doing well, so everybody wanted to invest in small cap. There is no harm in doing any of this. It's just that you should have a fundamental view behind where you want to invest and why we are investing. Don't invest just because it is trending. So many people make that mistake, and all these callers, they actually use these trends to sell products.
And don't do impulsive purchases, especially when it comes to investing. Yes,
because see, there are a lot of packaging when it comes to financial products, and there are products wherein if you commit, then you can't come out of it in like next 5, 10, 15 years. So you make one mistake and then you lose your current savings and you also lose your future savings because you have to keep investing and there is an opportunity cost. So impulsive buying should not happen.
Wonderful, sir. How does your background in CA help you deal with investors, like manage investors' expectations?
Not
better?
much other than the taxation part a bit, which I'm not updated because I'm not practicing. So it's not that I'm on top of everything, but it's a myth. And then typically, it's very funny. People with finance background generally have poor portfolios because they overestimate their own ability to manage their portfolios. I have studied accounting and taxation in CA. That doesn't help me when it comes to personal investing because what I need are behavioral skills to manage behavior of my client so that he remain invested for a long period of time by ignoring whatever information is available in the market. Russia is attacking Ukraine or Israel is attacking some other country. Kind of you have to, so you are managing them behaviorally. You have to help them behaviorally to invest more amount of money, which means you need to help them to spend less, save more. You are going against your behavior. See, what gives you happiness? Spending money.
Yeah.
You buy a latest iPhone gives you happiness. You buying a bigger car will give you happiness. And what we are kind of telling them to do: don't buy expensive phone, don't buy expensive car, spend less, save more. So a lot of behavioral traits are required, and that is what we do.
Oh, brilliant. I think every yes is a no to something, and every no is a yes to something. So it opens opportunities or eats up opportunities later. Yeah. Wonderful, sir. What would be your advice to people who are, let's say, overwhelmed with debt? Find ways to make money?
Oh, debt, overwhelmed with debt, you means they've taken a lot of loans.
Yeah.
See, if you are in debt, then first of all, you need to acknowledge that you need to be out of it. And then you need to acknowledge that there is a need to build portfolio. That can happen. And then compounding works both ways. If you are saving, the compounding helps you on the upside. If you are in debt and if you're not saving, it takes you the other way around.
Absolutely. It's all about the interest.
या
तो आप दे रहे हो या ले रहे हो.
तो सी सबसे पहले तो बहुत इम्पोर्टेंट है कि उस बंदे को ये समझ आने की जरूरत है कि उसको इस डेट से बाहर निकलने की जरूरत है और उसको किसी की हेल्प चाहिए. Once that is there, then one will figure out basis the earning, saving, how can you reduce the debt if he or she has taken debt on something which is not necessary. So to give you an example, I have, let's assume I have my own self-occupied property wherein I'm saving, but I have booked 3 other properties. And I'm kind of stuck and I'm waiting for that up move to happen. And I'm in debt and there is so much stress on me. So I will probably suggest them that cut out 2 properties, start saving more in other asset classes so that there is more diversification, invest in equity, which eventually over a longer period of time will give you higher returns. And we'll figure out what to sell, where to sell, and how to clean up the debt portfolio and slowly get them into a situation wherein, you should start saving more. So it is like you're saying that someone has a drinking problem and now you want him to become healthy. So you have to take him first from that negative zone to somewhere middle,
like
and
bring
then
him to zero first.
Take him up. So possible hai, but a lot of determination is required, a lot of patience is required. Otherwise, you know what is happening in developed world. People are under debt and they don't have solution. And in those countries, there's still some social security.
Yeah.
So you can survive. And in India, there is no social security. And then we're finding a lot of these youngsters are trapped because of lifestyle changes. People want expensive phones. Someone who can afford can buy. But a lot of these youngsters spend 3, 4, 5, 6 months salary on a phone.
Yeah.
Which is kind of unsustainable.
Wonderful, sir. What are your views on crypto?
See, I don't have any view on crypto because I don't understand it. As a wealth manager or an advisor, I would say that I don't recommend anyone to invest in any asset which you can't value. Because to invest in anything, you should be in a position to value it. Then only you can say at this price, it's a buy. At this price, it's hold. At this price, it's a sell. If you are investing in something basis the trend, then in my dictionary, it is speculation. Okay. So, and then if I don't understand anything, there's no point in investing my money into it. See, a lot of rich people do that because they invest their aspirational money. I'm a 500 crore guy. I will invest 50 lakhs, 1 crore in crypto. It's not going to make any difference to me. So I am doing it. It's my aspirational money. It's my gambling money. I just want a kick out of it. I'll get a kick if it goes up. I'll get a kick if it goes down. And people on this side, they feel that this guy is rich because he's taking such calls, and they also want to participate in such calls. Crypto can go up or down. I don't have a view. I can't value it. I don't understand it to the extent I should be understanding it if I want to recommend it to someone. So personally, I don't invest. Personally, I do not recommend anyone to invest.
Okay. All right. I have lots of friends who are invested and also think highly of it.
I'm sure. See, I have met a lot of people who find value in crypto investing, but I still haven't found anyone who can tell me how to value it. So maybe it is good, but let's assume you are buying it at an expensive rate. Maybe it's not the value at which it is trading. Maybe it is 50% above that value.
Yeah.
Then you should not be buying.
Yeah, and I'm not sure there is a way to estimate that, because a lot of this is mood driven.
Maybe there is, but at least I don't know it.
Okay. Because sentiment seems to play a very big role in crypto.
Yes. And if when I'm talking to people, they're investing it just because it is going up. Or the another reason is that we don't want to eventually realize that, we missed the bus, we could have invested. And people around you are investing, so you're investing thinking that probably he'll make tons of money and I'll be left out. So that there is that fear of missing out.
Okay. All right. So you don't recommend, but you probably evaluate a person's profile, and then if they have that aspirational sort of money left, then you'll say play with it. Like it's almost like a play.
See, on behavioral side, I do not recommend anybody to do anything which will kind of screw with their brains. What happens is that person says that I will invest a small amount of money, but let's assume he's successful. He invested in aspirational money in something and it doubled.
That dopamine rush then.
Yes, and then the confidence on his own ability to figure out where to invest, how to invest goes high. And then that aspirational thing eventually starts ballooning up.
Yeah.
And that is how, people have lost money historically. Because you start giving more importance to something wherein you should not be giving importance.
Which is R.
Which is, R is important, but but investing in something which you don't understand. And of course, if you get higher R, you are saying that let me invest more money.
Let me invest more money. Yeah.
And that is how the busts happen.
Yeah. And the compounding formula, you were like in our last conversation, you were relating that with health as well.
So see, I have started running few years back, and it works. This formula works everywhere, whether it is relationship or it is running or it is exercising. Now, if it comes to let's discuss running. What is P? The miles you are putting in every day. Sometimes you're going for a short run, easy run, long run. Some active, it's a hard run, you're doing intervals or something else. So basically this is your P. And then comes your T. For how long are you doing it? You can't follow a plan for 2 weeks and then go for a race. So P and T are important, and then R is a byproduct. Of course, it doesn't exactly correlate with finance, but P and T is important. Similarly in relationships, when your relationship is not going well with your partner, your wife, then what do people suggest? The elders, they suggest time de do. So T is the most, time de do, usko time de do, problem ko time de do, don't rush. Don't think about separation. ठीक है, time दे दो. So time is most important. फिर P दे दो, जो आप कह रहे हैं वो P है, कि आप उसमें relationship में effort डालो थोड़ा सा, है ना? And when P is there, T is there, R will be as a byproduct come in. It'll follow. So compounding ka formula works everywhere. And probably that is the reason it is known as the 8th wonder in the world.
Yeah, compounding. Absolutely.
One who understands it actually makes life better by using it everywhere in the life.
Yeah. No, I mean, I haven't read too many books and blogs and stuff, but the compound effect and the psychology of money are two that I've read, and they're amazing books. Are there any resources that you want to point people to that to educate themselves more?
See, I don't listen to much podcasts, but I can share a couple of books. In fact, there is this book by there's an author, Nick Murray, based out of US, pretty experienced. He's written a book called Simple Wealth, Inevitable Wealth. For investors, I think every investor must read it. Because, see, they are ahead of us by 30, 40 years. And they have seen what we are seeing in Gurgaon and Bangalore and Mumbai kind of lifestyle. They've seen much ahead of us. and they know the problems, they know the solutions. So it's a very good book which they should read. Then there is another good book written by my friend Arun Kumar, 80-20, which talks about frameworks. So very important to understand what are the investing frameworks, and whatever words I've used like asset allocation, diversification, how to do asset allocation, which profile should do what, at what age you should do what. So that gives you an insight into it. Still, I would not recommend anybody to just use them as is by going DIY route.
Yeah.
But yeah, even if you're dealing with an advisor or a wealth manager, it will help you to understand. There is a podcast, Animal Spirits. It's a US based podcast.
Okay.
India में तो मैंने ज़्यादा नहीं सुना है. I'm not regularly listening to it, but it is good. It is good. It gives you decent insight.
Yeah, this has been super interesting. And it's a subject that we still need to learn a lot more about. And I feel maybe we could do a series of episodes wherein we dive deeper into subjects and learn how to generate wealth.
Yeah,
Will you
certainly.
be आप सिखा दोगे हमें?
Yeah, I'll be more than happy to help. And actually, a lot has changed in this personal finance area in India, and there are topics which are kind of untouched and not known to people. And we can certainly deep dive. And creating wealth is not tough, but one should know how to do it.
Yeah, that's exactly what we want to learn.
Yeah,
So
more than happy.
let us come back here soon and do a round 2.
Sure.
Wonderful, sir. Thank you.
Thank you.
Thank you.